BigBear.AI has been on the move recently, and today we're going to go over what we're seeing with the stock. There is a defense sector here with a focus on AI, and similar to Palantir, BigBear.AI has a intense focus on utilizing AI technologies for the contracts that they have with the Department of Defense, with the Army. They're working with the Pentagon, and specifically, they have this technology called their BarryScan, which is a facial scanner that they're deploying at most airports and international airports, including Denver, LAX, and Chicago, along with Dallas and JFK and Heathrow. So they're international, and they're going directly to the airlines as well, collecting massive amounts of data related to travel and trade. And they're working with the Panama Canal, and their CEO previously was U.S. Department of Homeland Security and acting secretary. Their commissioner of U.S. Customs and Border Protection is the other position. So you have a recent trend, a correction on the stock, and we entered a position today. It literally did not move at all day long, or I guess at one point it dipped down here, but it's still holding here after hours as we were trading it this morning. This morning we shorted some quantum markets. We're up about 4.9%, which we traded over on IonQ. And what we've seen with BigBear.AI, we have long-term positions around $2.80 average. We started covering it here in October 2024. It was around $1 a share. We saw it push up as high as 10.36 by February. And then after February, with the greater market sell-off, sold down as low as $2.46 by April. So when we're looking at the movement with BigBear, we started to see them really recover, make runs back up into that 872 by summer, pulled back down to that 200-day moving average, that green line. And then now they've pulled back down after reaching 850 once again. Late September, they've sold back down to that $6.50 support. So we see them holding that $6.50 today, still there. And it's funny because today was the day when we were looking at it this morning. We said, well, based on this downtrend, so normally in an uptrend, you could watch that EMA. It's holding above that blue line. It's stair-stepping up in that bull trend through September, up into $7, back down into $6, up into $8.50, and holding above that EMA. Then we saw them break below, start the same kind of pattern, but in the opposite direction. And someone pushed a button essentially to make them reverse here. We saw some institutions start to sell back off a little bit after big institutional buying here since late August into September after their recent earnings when they sold off. So we're going to jump into the financials in a second, but you could see they made a correction since 850 back on the 23rd, and they've been downtrending all the way until now and holding below that EMA, kind of getting rejected, selling down as low as $6.28 down to this previous level of support. So 650 notoriously has been a level at which they've kind of consolidated around, sometimes even bounced, sometimes gotten rejected at this level. And we kind of took a chance this morning on what is a breakout potential. So we started to see them shoot up at market open here. Let's see if we get a better view, up into about $6.70 this morning. And we go live every morning, Monday through Friday. If you ever want to tune on in, it's the second link in the description down below. And we were watching this sell-off after that big push up. And then we were saying, hey, it looks like it's pushing out of this trend here, this downtrend, and we're seeing a breakout, maybe a push back above this moving average. See that line? It's getting rejected. And that we could see a breakout here of about 5 to 10% margin for profit. So something like this, up to the $6.75 to potentially $7.20 a share. And so we ended up buying here right around 649, 648, somewhere in here. And so far, it hasn't moved much. So we got a short-term trade going. We're looking for a breakout actually here to break out of this support. We've traded this support many times. I think it was this trade we got to catch last time when it pulled down to 650, and we ended up buying here, caught a nice swing. And then back here, Let's see. There's been some really nice support levels around 650. There's another one kind of in that range where it shot up to 860 or down here. And so we've seen those levels get tested before. And so today we're kind of watching that. We do need a little bit more market direction probably in the defense space to see this play out, because it hasn't really moved much. So we'll see how it goes. But if it goes according to plan, then there's a few things that are going to continue to drive it. The first is institutional buying. We see institutional buying heat up with almost 200 increased positions, active positions from big banks, big institutions like Vanguard, BlackRock. You got State Street investing more in Goldman Sachs. But why? What's the reasoning why? I mean, we looked at the BarryScan here. When you look at the financials, there's nothing that sticks out really. There's some hype articles here. You have quite a lot of hype articles. We don't need to look at those. There's not anything there. We'll go direct to the source and see the value that they're providing to the marketplace and kind of follow the stock in that way. But the quarterly revenues and annual revenues, they haven't surprised. They've been flat, kind of increasing slightly year over year, just about 2%. And then the last quarter, revenue dropping a little bit with negative net income. So there was a few reasons why they're attractive right now. The first is that while they've deployed a lot of their new BarryScans and their negative net income came in at negative 228, there's been some studies that show that that on paper looks worse than it actually is. In fact, there was a nice take from one of our members over in, I think it was here in Stockmate. And I think it was Michael Clark, if I'm not mistaken. Michael Clark had an alternative view. Let's see if I can find it on BigBear.AI. And what he was talking about was essentially that goodwill impairments. So he was really pessimistic about the earnings. The numbers look bad, but a big part of the reported loss wasn't real cash leaving the company. First was $70 million in goodwill impairment. So that's an accounting write-down of value from past acquisitions. It's a one-time charge and doesn't touch cash. Now again, this isn't just any article. I don't know. I gotta talk with Michael, but we have over 24 individuals with a net worth of over $1 million investing in Stockmate. And the insights here are oftentimes very well studied, very well thought out. It's not hype. We're not just signals. Here's what's to buy. It's more why things move, things like that. And one thing he pointed out too was derivative liability revaluation. So this is an accounting adjustment to the value of warrants, options the company issued. This moves with the share price. In the quarter's case, it swung heavily negative. Again, it's a paper loss, but not actual cash leaving the business. So if you strip those out, EPS would have been about negative 8 cents, only around 2 cents worse than estimates. Still not great, but it wouldn't have looked nearly as disastrous as the negative 71 cents that was reported, and that the actual cash flow was a negative around 10 million, not that negative 228 million. So this is really important because not only do we see some of their cash positions jump up, and this is where we can kind of take a look back. Thanks, Michael, for the great insights. The balance sheet saw a surge of up to 600 million. So when they jump up to 600 million in assets, cash is up 440%, liabilities are up 66%. Assets are up 66%, and the total liabilities are up just 28%. So you're looking at an increase in the balance sheet. They're positioning themselves nicely. Could we see them sustain? And this could be a momentary pullback, maybe find support around 650. It's quite possible. If you take a look back, you do see this overall kind of uptrend. Could be biased as I have long-term positions over in the Schwab portfolio. But again, really seeing that pullback kick in recently down to a level that we have seen them bounce quite often. So that's why we got into the position. We'll continue to watch that 650 range. If they can hold 650, we're looking at a nice $6.50 support there. Potentially seeing them get back up into that $7 resistance here. That's going to be a previous support and resistance at $7 a share. That would be the next bullish target. And then of course bearish, we're just looking for them to really hold above that $6.30, $6.50 range and not sell back down in this trend. So we got to watch there closely. Have some risk management on the short term. Have a plan on the long term. Continue to watch it closely. And if you'd ever like to tune in live to our daily live trading sessions, see the opportunities in AI, quantum, data centers, we're watching even minerals, semiconductors, robotics right now. Quantum computing is what we were trading this morning in our live session. You could always join on in. It's the second link below. We closed lifetime access for a while. People really didn't like the subscription, so we opened up lifetime access once again. It's there and available now, and you get a free t-shirts when you join. I'll send it to you anywhere in the world. Thanks so much for watching. Fire your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next video. Take care.